How to get a mortgage when you're self-employed. Every year, more and more people join the ranks of the self-employed, gig workers, freelancers, or having a business on the side. That's great, but it brings certain challenges. One of them is getting a mortgage so you can buy a home. Let's make it clear, you can absolutely get a mortgage when you're self-employed. You're just going to have to jump through a few more hoops than someone will to qualify for a mortgage who has years of steady work history with the same employer. Why is it harder for self-employed people to qualify to get a mortgage? Lenders who hand you hundreds of thousands of dollars to buy a house really want to make sure that they'll get repaid, and people who are self-employed tend to have less stability in their income, especially at the beginning of their business. So, lenders tend to ask for more proof of income and may have stricter requirements for self-employed people to get a mortgage. You still fill out the same application, and they look at the same data as a non-self-employed applicant, like your credit, your assets, your debt, and your income. The difference is that they will need to look at more information to validate the source and consistency of your income. The 1-year self-employment challenge. They will be looking for that business to be actively generating income for you for at least 12 months, ideally at least 2 years. If you've been in business for at least 12 months and less than 24, they will also need to verify your employment for the last 2 years. They'll also probably delve into your skills, training, client list, and educational background to try to determine whether you can have a stable income in the future. How to prove income when self-employed. Self-employed people are usually asked to provide additional documentation. These are the things lenders tend to ask for. Personal tax returns, profit and loss statements, business tax returns, bank statements to prove that you have sufficient funds to make your down payment, self-employment verification. If you're employed by your company and are getting a W-2 from it and regular paychecks, they will want that. That's the best proof for employment verification. If that's not the case, your lender will likely ask for things like proof of licensure. Examples: CPA, real estate, financial planner, medical, etc. Letters or emails from current clients. Membership in professional organizations. Business license. Doing business as certifications. Being proactive as a self-employed mortgage applicant. Select a lender who is used to and comfortable working with self-employed borrowers. You may need to use those marketing skills you usually employ to sell your products and services and apply them to selling your underwriter on why you're a good business person and why it is worth loaning money to you. Income consistency is key. The better job you can do of demonstrating consistent income, the more likely you will be to get a loan. As per us at Keith Go Lending Team, yes, you can buy a home and get a mortgage being self-employed. We know, we have done it several times. It may just require a bit more effort on your part to provide the documentation needed to decide you're a credit risk that's worth taking.